Hey everyone, Chris here, Ghost of GBT on Reddit. Going to be doing some chart analysis for you. Let's see here. Just trying to find the thread so I can see what we're analyzing. Okay. So the 10 that I was able to come up with for today, I know there were some that were upvoted at the top that they were foreign companies or they were traded OTC, and that's not something that I trade. So I picked ones that were very clear in terms of whether you want it to be long or short and whether you want it to be in the trade long-term or short-term. So just going to do a quick analysis of each one of these. And I'll preface this by saying I'm not a long-term trader. I do some longer-term swing trades, but I'm primarily a short-term day trader and swing trader. So take this info for what it is. We'll start with Nvidia. Nvidia was one that got a bunch of upvotes, and there seemed to be a lot of people that wanted to talk about this one. So we'll talk about this one first, and then we'll go from there. So Nvidia, I'm going to actually pull my pull up Firefox here. And I want to start. So first of all, I'm a technical trader. So the chart looks awesome. I mean, this is it's a little bit extended in my opinion on the weekly chart. We've gone from $20 to 62.50 here. So, the stock has essentially tripled just within the last year, which is good, obviously, but it might need, if we go back on the weekly chart several years, you'll see, we might be at the point now where we're kind of, we're getting a little bit parabolic, and it might actually be a better short, at least temporarily. That's not to say that this is not a super strong company long term. It looks like, just looking at the chart alone, this looks like a very, very strong company. It's in a hot sector. So, I think overall this is definitely a long. What I would do if it were me, if I were going to buy this long term, I would probably be averaging into it, over a long period of time, because even though it looks hot right now, I think just from a technical standpoint, we're pretty far away from the 200-week moving average. So this is the, moving the average price over the last 200 weeks. And you can see anytime it gets real high above that average, we tend to get a pullback over the next several months. So, not to say that that's going to happen tomorrow or even within the next couple of weeks or couple of months, but it's something that's in the back of my mind when I look at this chart. I would like to see this pull back, probably 50% of this move at least. So I would be more interested in buying this probably in like the 40s. But, from a technical standpoint, it looks like a strong chart. On the daily, it actually looks better, right? So I would try to, get into something like this over time. I wouldn't just dive all in, all at once, just because I don't think that this is the right time from a long-term perspective. So people were asking about longing this for the long term. I do agree that it's a hot long-term chart. It's a profitable company. It's got Jim Cramer backing it up, pumping it, saying it's the hottest chip maker in the country, and so on and so forth. So, I think there's a lot of good with this company. I just think it's a little bit extended to buy it right now. If I were going to start buying right now, I'd definitely be doing it in small pieces. So those are my thoughts on Nvidia. We could look at some of the other stuff on it also. We pull it up on FinViz. So it's 500 million shares float, which is actually, it's nice because it's not going to be too volatile in the short term, but it's also not so much float, like a company like Microsoft that has, 7.6 billion shares in the float. Nvidia, it's going to move a little bit faster. It's going to be a little more wild. So, that's a good thing because it's going to give you the opportunity to get in and out and take profits along the way if you want to. It's not going to just sit there for 6 or 12 months at a time and not do anything. The other thing that I noticed is the short interest is about 9%. So these are people that are holding the stock short for some reason. So there is about 9% of the population that thinks this is a short for whatever reason. That can be both a good and a bad thing. From a long-term perspective, it might be, more of a negative thing just because, people are looking at this as a longer-term short. But at the same time, it could also be bullish in the short term because these people, as the stock continues to rise, are going to get squeezed out. They're going to have to stop out of their shorts, and that's going to require them to buy, which just adds additional buying pressure. We've also got some positive news flow. They had some good earnings back here I think it was in May when they released their last earnings, and then they just did another earnings release on the 11th, which also beat expectations. So I think if we go to streetinsider.com here, throw in Nvidia, we should be able to see what their last two beats were. So May 12th, beat by 14 cents, beat on revenues as well, and also raised guidance. And then same thing here, we beat by about 16 cents and beat on revenues. They did not issue any additional guidance. So, overall, it looks like this company is, they're consistently beating earnings. The chart looks great. It's a well-known company. It's got good volume. It's got low float. It's got enough shorts in it to, make it go up as they get squeezed, but it's also not, it doesn't have too many shorts that are going to, that indicate that something is wrong. So those are my thoughts on Nvidia. Take it for whatever they're worth. Next one was Frontier Communications. So this is ticker FTR. I look at charts like this and I just see them going sideways. I mean, this one's actually downtrending on the weekly. And it's been downtrending for a long time. So I guess it depends on, what your time frame is, whether or not this is a good buy for the long term. There's got to be probably some other fundamental reason that you want to get into the stock. So, I would be comparing this to other companies in the same sector. I'd be comparing it to Sprint, Verizon, AT&T. I'd be comparing it to the internet service providers like Comcast, maybe Discovery Communications. So compare it to its competitors and kind of see where it stacks up, because a lot of these companies, they're just going to sit there, right? This is there's no real trend on this chart other than down. And when we look at the S&P 500, the S&P 500 has been going up, since 2009. So if the S&P has been running since 2009 and Frontier Communications has been essentially face planting since the year 2000, that says something to me. What it is, I'm not quite sure, but this does not look like something that I would want to throw a ton of money in without at least knowing a lot more about the company. Next one, US Geothermal. I did a little bit of digging on this one. Let's see what I can pull up here. So I wasn't familiar with this company. The person that brought it up was asking, let's see, HTM long for the long term. So the first thing I did is, since I didn't know the company, I just went to FinViz and I wanted to see, what they do. So it's a renewable energy company. They're focused on the development, production, and sale of electricity from geothermal energy in the Western U.S. They operate geothermal power projects, generation capacity of 45 megawatts. So they're in Oregon, Nevada, Idaho, California, and Guatemala. So with this type of company, since I don't know a lot about them, I do sort of a standard kind of 5-minute fundamental analysis, and that just involves going to finance.yahoo.com. And I just want to look and see, what their kind of overall picture looks like. So I'll go to the company profile. I want to see how big the company is. They've got 48 full-time employees, so not a huge company, right? It's a pretty small company, 48 full-time employees. They were headquartered in Boise, Idaho, and incorporated in 2000. So they have been around for a while, but they're still relatively small. In terms of their key statistics, the things that I would look for, I'm primarily focused on cash, debt, and whether or not they make money. So one of the things I liked about this company was that they do have, they got $7.5 million in cash as of the most recent quarter. And these may be outdated. You probably want to look at their, actual quarterly balance sheet to get, the real numbers. It looks like it's actually a little bit higher. As of the last quarter was 11.5 million in cash. But the theory still holds true here in terms of what I want to look for. I want to see how much cash they have. I want to see how much debt they have. And then I want to see if they are making money, right? So if the operating activities of their business are generating cash, that's a good thing, right? So here we have $13.86 million worth of operating cash flow over the past 12 months. So they're cash flow positive. They have a little bit of cash on hand. They do have a lot more debt than they have cash, but because they have positive cash flow, they're going to be able to service that debt. So that's not necessarily a huge problem. May not be good for the long term, but we'll have to look and see. The other thing that I noticed was they are net income positive. So the company is profitable. Return on assets, return on equity, not huge numbers. I'm not sure how these stack up against their competitors, but the point is it's all positive. So it's not like it's a junker company that, no one's ever heard of. They've been around for a little while. They've got 50 or so employees. They make a little bit of money, and they don't have an exorbitant amount of debt. Sometimes you'll see companies that have, 15 million bucks in cash and they've got $5 billion in debt. And that's, unserviceable for the long term. This, on the other hand, is a little bit different. So I did like that. The other thing that I'll do is just check to see if their net income, is positive. And in this case, we already saw that on the last link. Net income's positive. Cash flow, operating cash flow is positive on a repeated basis. And then balance sheet, we have just this bottom line is really all I care about from a quick fundamental perspective. Are they, net positive? So in this case, net tangible assets minus liabilities. Yes, right. They have more assets than liabilities. So that's a good thing. So in terms of the chart, it's pretty beaten down. It's just kind of been going sideways for quite a long time. So, if you were going to invest in this, I would say it's definitely low risk because it's a penny stock for one thing, and it doesn't seem to really have doesn't have a ton of volume, and it doesn't seem to have a ton of movement to the downside anymore, right? It's just been kind of flatlining here above about 30 cents for the last 6 or 7 years. So I guess if you're into picking bottoms, then sure, this seems fine. I don't think there's a ton of risk involved in this company. It doesn't seem like they're teetering on the edge of bankruptcy like some of these energy companies are. But you'd want to read the annual report. You probably want to find out what projects they have in the pipeline, what things they have in line for the future, and make a decision from there. But overall, not a great chart, not a terrible chart. It could go either way. I don't think I would personally buy it just because it's a penny stock, and I don't really find too many penny stocks that are worth investing in for the long term. For me, they're mostly just trading vehicles. So that's HTM. Next one, THC. Someone had asked about this for the long term. THC, which is Tenet Healthcare Corporation. This is I believe they're a hospital operator. Yeah. So let's pull up some info on these guys. THC. So first things first, fairly large company here, $2.5 billion market cap. So we're not talking about a small hospital operator. There may be bigger ones out there, but this is a pretty good sized company. 100 million shares float, 10.5% short interest. Average volume is 1.5 million shares. So, it's a liquid company, relatively speaking. It's going to be fairly volatile since the float is pretty low. And also the short interest is fairly high at over 10% here. So, it's going to be a volatile company, as we can see on the chart. It does tend to, spike up and down multiple dollars per share each day. So, that's one consideration, especially if you're going to be holding this long term, is this is going to be, a company that you're probably not going to want to check every single day because it's going to be up and down and kind of all over the place. The other thing I would do is just kind of go through the last, 6 to 8 months of news flow and just see kind of what the news flow is like. Is it positive news flow, negative news flow? So, that's something easy that you can do on your own. The other thing I wanted to check was just how big they are. So I found down here at the bottom, the company operates 86 hospitals, 20 short stay surgical hospitals, and approximately 475 outpatient centers. 9 private hospitals and clinics, 249 ambulatory surgery, 20 imaging, so on and so forth. So pretty big company, right? They've got a lot of hospitals. They've got a lot of outpatient centers. So it's a good sized company. So since I'm not super familiar with the hospital industry, what I did with these guys was I compared their performance in terms of the financials with everything else in the same industry. So if you just click on hospitals here, it'll pull up anything else in the same sector or in the same industry. And so if you look at their financial kind of how they stack up, one thing that stood out to me was their debt to equity ratio. Relatively speaking, THC has the highest debt to equity ratio out of any hospital in this list or any hospital operator. So that's a bit of a turnoff to me. And it's not necessarily just, the highest. It's 4 or 5 times higher than the next closest one. So this company does have a lot of debt, which, is never a good thing when you have too much debt. But, maybe there would be another comparable thing, comparable hospital like Community Health here, which, is about half the market cap, but significantly less debt. You've also got LifePoint Health here, which is roughly the same market cap with, a 27th of the amount of debt. To me, I would be more interested in one of these LPNT or CYH or one of those guys. But, I'm also not a long-term investor, so I don't know, if there are implications in terms of Obamacare and like macroeconomic factors. All of that could sort of go either way. So I would just say with THC, in terms of the fundamentals, the debt is a real concern to me. Other than that, the characteristics of the stock itself look fine in terms of the float, the volume, the short interest, all that kind of stuff. But there might be better ones out there. You might consider looking at one of these CYH or LPNT or one of these other ones. Personally, I'm not an investor in this industry, so I don't really know a ton about it. In terms of the chart, same type of thing we're seeing on these other charts. They're just beaten down. It looks like they might have done a split back here in 2012. Let's see if we can find out. I had a website here, splithistory.com. There's a way you can look up whether or not they had a split. Yes. So 1 for 4 in 2012. So they did do a reverse split in 2012. Typically, whenever I see a stock do a reverse split, it's because something is wrong. Companies will split for various reasons, right? They'll split forward for various reasons. This might have been a split here too, actually. That was in July of 2002. So they might have just maybe split the price in order to lower it so that more people would be able to invest and then reverse split it to kind of get it back to where it was. I've never personally seen a company do that, but it kind of looks like that's what happened here. Normally when a company splits, it's because they want more people to be able to invest in the company. So like when Apple split, they split 7-for-1 so that the stock is now 1/7 the price. So that, it brings in the ability for more investors to invest in it. So that could have been what was going on with THC here. And then they maybe just reverse split it to get back up to where it was. But, I would want to know the reasons for these splits. So, you could dig into the SEC filings and probably find out why. But, at the end of the day, if we look back on this chart, we're already going back to 1996. And I think that's actually as far as this software will go. But where are we really relative to where we started in 1996? We're at 15 bucks a share, went up to 60, then we reverse split. We spent a bunch of time here down in the 5 to 10 range, and then we forward split over here, spent some time in the 5 to 10 range, then we reverse split, we go back up to 50 or 60 bucks, and now we're back to 25. So, in literally 20 years, share price has only appreciated 10 bucks a share. So to me, that's not, a screaming buy. And it just sort of seems like it's stuck. If we look at some of the other ones, I'm not sure like what their charts look like. CYH is even worse. Looks like they had some kind of a disaster here in early 2015. What about that other one, LPNT? And there was another one, SEM, which was in the top. So this LPNT, this looks like a much nicer, a cleaner uptrend. It looks like it's not nearly as volatile in terms of the ups and downs. It seems like it has a much smoother trend. So, this would be something that I would be more interested in investing in. SEM, which is Select Medical Holdings, same thing. It looks like this is a newer provider, a newer company, or they renamed themselves back in 2009 or something, but that's as far back as my chart goes for some reason. Same deal on this one, right? We started in 2009 at 10 bucks a share. Today we're at 11.50. So, it's kind of a waste of time. So THC, those are my thoughts on it. TWLO. So TWLO has been supposedly the hot IPO of 2016. I do like TWLO. I think that I think they IPO'd at 40 bucks or something like that, or they IPO'd. I remember Jim Cramer saying that they IPO'd. I think it was like, maybe it was that they IPO'd at 15. I don't know. I'd have to look at the papers. But regardless, I do remember Jim Cramer saying he thought they could go to 60 bucks, and everyone thought he was crazy. I actually thought he was crazy. I shorted it within the first few days and made a little bit of money on these pullbacks. But, overall, it's got Cramer behind it. He's pumping it like crazy. So I do think that it has some juice. I do think that, TWLO is in sort of a hot industry right now. I think if I remember right there, these are the guys behind Uber and the communication between the drivers and the Uber users. So I don't know the exact details of what TWLO does, but I remember reading somewhere that they were the guys behind the Uber system. So with all of this, everything going into the cloud in the future here, Amazon Web Services and all of these cloud applications, I do think there's a strong future for a company like TWLO. So long term, I like it. I would definitely want to dig into their IPO paperwork and find out, how much money they're making, and compare that to what they've just released here in earnings. Seems like the market likes it so far, but Cramer definitely likes it. I think there's a lot of hype, so that could potentially carry it. The only thing I would caution you on is just that it started at 23 bucks in June, the end of June, and now it is August, so June, July, August, right? Just 3 months later, and we have effectively almost tripled in price. So it's getting, for me, it's getting a little pricey, but then again, it's an IPO, so who knows? So those are my thoughts on TWLO. I do think it's a strong company. Not sure if I would invest in it right now or not. Mara, this one was a interesting adventure. So the person who posted this asked about Mara short as a short-term short. And initially, you know, I looked at the chart and I thought, based on the daily chart here, it actually kind of looks like a nice long. But then I started digging into what the company does. And what I found is that they actually used to be a couple of other companies. So they're currently Marathon Patent Group, which is a business services. It's a business services company. And basically what they do is they go out and they acquire the rights to other people's patents, and they strike up licensing deals so that they can make royalties off the patents and that kind of thing. One sec here, I'm just going to respond to a text message. I can't talk and read at the same time. I got to send someone my address. Okay. So I've seen companies like this before where they don't really have any of their own products. They basically just capitalize on everybody else's ideas. And the one that comes to mind is, it started with a V. I don't want to say Vringo. Maybe it was Vringo. I don't know. Anyway, the thing that bothered me about this is just that they didn't really have any of their own products or services, right? So, so I started digging into, you know, what they do, and I found that they used to, I made some notes on it here. They used to be a uranium miner, which was called Verve Ventures. And then they changed their name to this American Strategic Minerals Corp, which was then a real estate development company. It might have been the other way around, actually. The uranium miner was American Strategic Minerals Corp. I had to go back into their SEC filings to like 2012, I think, to find it, like the end of 2012. And so now they are a patent acquisition company. So to me, you know, just on a high level, overall, it seems like this company doesn't really know what they want to do. I've seen companies like this in the past where they start out as a brewery and then they turn into a real estate development company, and then they turn into a mining company, and then they turn into something else. And at the end of the day, usually what happens is it is either a fraud or they just go bankrupt. So I would definitely not invest in this long term. It might be good for a short term spike here out of this little consolidation over maybe 315. You know, you might get a little pop up to 360 or 380 or $4 or something like that. But I do like the idea overall of shorting this. I'm a very short bias trader overall anyway. So, you know, I like the idea of shorting this. What I'd love to see on a stock like this is for it to break out and run to, you know, 450 or $5 and just get very parabolic, you know, get very extended to the upside, and then, you know, get in for a short and kind of ride it back down. These companies usually, you know, they end up with the same result. At the end of the day, they're going to end up at zero, or they get delisted and halted. So not a company I would invest in long-term by any means. For a short-term long might be okay. You know, if you want to just catch the pop out of this consolidation, and then what my ideal situation would be to wait for the consolidation, or the other possible thing would be to like maybe break underneath this trend line for a short-term short, maybe back down into this 210 to 220 range near the 200-day moving average. So that would be my plan on Marathon. Next one, WLL. Whiting Petroleum Corporation. This is a great trading stock for a long-term investment. Depends on what you think oil is going to do. I don't pretend to know, you know, the macroeconomic factors that are going to affect the price of oil over the next 10 or 15 years. But just look at this chart. In 2003, the stock was $8 a share. In 2016, the stock is $6 a share. So it really has not gone anywhere over the last 13 or 14 years. So that to me is just an instant turnoff. The other thing that's a huge turnoff on this company for me is the amount of debt that they have. And I've traded this company a million times as a day trader. It is a great trading stock, but in my opinion, it's not an investment. This company has $15 million in cash and they've got $5 billion in debt. The only thing that they do have going for them is they have almost $1 billion in operating cash flow. So, the cash flow from their actual operating activities is fine. Net income, though, I mean, they're losing $2.5 billion a year. To me, it's just it's not an investment grade company. Most of these oil companies like this, oil and petroleum, there's a lot of them out there that have this type of situation where they've got very little cash. They've got tons of debt. Seadrill is another one, SDRL. Couple $1 billion in cash, right? But they've got $11 billion in debt. A lot of it is long-term, so it's not due for, 30 or 40 years or whatever. But still, it's not a sustainable situation when you've only got $10 million in the bank and you have to pay off $5 billion in debt. So this would definitely be a no-go for me in terms of long-term investment. Short-term, it's a great trading stock. It's liquid. You can trade a ton of size on it if you're day trading. It's good for swing trading also. Whenever oil as a sector takes off, this is one that always goes. TWLO, you can see back here in the beginning of March, we had this little run in the oil sector, and this stock went from, $4 to $8.50 in just 4 or 5 days. So, it definitely has the potential to make some big moves, but it's definitely, for me, it's a short-term trading stock. Okay, ABB. I believe this is an equipment manufacturer out of Switzerland. Let's find out. Yeah, diversified machinery out of Switzerland. So a couple of things actually that I liked about this. They have some interesting infrastructure solutions. So we have this like electric vehicle fast charging infrastructure. That's something that's sustainable, I think, for the future. If we have cars like, Tesla and things like that running around, electric cars, if that type of stuff starts to take off, a company like this is going to be, very valuable. Or a couple of other ones, solar inverters, wind converters, right? So they're in some ways, connected to this whole green energy thing, which I think is a cool industry to be involved in right now. So, overall, the chart, went from 18 to 22 and it took 2 months to get there. That's a little too slow for me, but I'm also a day trader, so it might be okay for someone who's interested in something for the long term. This is another one that's just it's been consolidating sideways for a very long time. All the way back till 2001, we did have like a big run here from 05 to 08. So what I'm kind of noticing is we have this big consolidation that's starting to take place. So I would think, maybe over the next 6 to 12 months, if this can tighten up into a tighter range, kind of like it was over here, I would think that this could potentially be a good longer term long, just based on the chart. Of course, like all of the longs and all of the companies that you're going to invest in long term, you want to look into the financials. You want to read the annual report. You want to find out, if they're making money. You want to find out what the future holds in terms of what they're developing and make a decision as far as, if you think that's a sustainable and a useful area to be involved in. I saw a couple of things, like I said, with the solar inverters and the wind converters, as well as the electric vehicle infrastructure, which could potentially be interesting for a company like this. The question, I guess, is how much of their revenue and how much of their income is going to be derived from those things? Because if it's just a small piece, then you've got to consider the other things that they do as well and find out if those are going to be as valuable. But overall, I like it. I mean, it's a clean weekly chart. It's not, I don't think it's ready yet, but you could potentially start, buying little pieces of it here and there on dips, see if it see if it materializes into something useful. If it started to break underneath this lower trend line here, if it got down into the $14 range or the $12 range, I would cut it off for a loss. So I'd trade it sort of from on a technical basis. Walmart, the infamous Walmart. So someone who had asked about this one, it was Walmart long-term for a long. So, I mean, the big question with Walmart is always, how are they going to compete with companies like Amazon? So for me, being not a long-term investor, I think, eventually stores like Walmart are going to start to lose market share as we have drones flying around delivering us groceries to our doors from, online retailers that we bought them at. Those things, in my opinion, are going to happen, right? I'm a millennial. I'm a younger guy. So I see this type of stuff happening. The world is becoming more interconnected. So I do think that Walmart and, standard retail stores are going to start to be phased out over time. But I still think, a company like Walmart, they've been around for, God, how long? Walmart was founded in 1945. It's headquartered in Arkansas. So, I mean, the company has been around for almost 100 years. They're not going anywhere anytime soon. So I would just treat this, looking at it from a technical perspective. It looks like we had sort of a big long-term sort of breakout back in 2012. So we broke out of this like long consolidation that had been going on since like the late 90s. We broke out of it, broke out to new all-time highs, and we came back down and bounced off of that same trend line. And so now we're kind of stuck back up at the 200-week moving average. Over the 200-day moving average, I think as long as it holds above that, it's going to keep grinding. This stock is going to be very closely tied to the S&P 500 as well, the S&P 500 and also the Dow Jones. So if you see the SPY and the DIA, if you see these ETFs, continuing to break to all-time highs, as long as they stay strong, Walmart's going to stay strong. As far as earnings, I don't pretend to know how to predict earnings. I don't know if they're going to beat, miss, whatever, right? But we'll find out. So I think for Walmart, I would watch the S&P 500 and see what the S&P 500 does. As long as the S&P and the Dow stay strong, I think Walmart's going to stay strong. So it's something I would definitely invest in. It's just not something I would put my entire nest egg into. It's also not something that I would not want to watch. I'd want to watch their earnings. I want to make sure that nothing strange happens. Nothing out of the ordinary happens in terms of their earnings. So actually back in October, when they got smoked out in their, I think it was their third quarter earnings, their third or fourth quarter earnings, this was a great buy point. So I think Walmart is actually like the type of company where you almost want them to miss earnings expectations so that they get slaughtered and then you can buy the dip. But if they beat, the easiest thing to do would just be to wait for a consolidation on the chart and, buy it once it's lower risk, right? You see a stock that it's trending along, and then it gaps up, goes on a run, and then consolidates for a few days, and you buy it here as it breaks out with your stop loss under here or maybe underneath the earnings gap. That way, you have a little bit lower risk, right? You're not just buying it randomly on earnings day when it has this huge gap that it could potentially fill. So that's how I would play Walmart. The last one here was Skyworks Solutions. And this is another stock. I've traded it a million times. It's got, a pretty strong overall, pretty strong weekly chart. I really love this pattern of just kind of bouncing off the 200-week moving average for years at this point, right? Since 2009. So we had a big run up into the dot-com bubble, and then everything falls apart, right? We're under the 200-week moving average for a while, and then we start to kind of trend above it. You go on this gigantic run up into maybe mid 2015. And now I started to come back and it's starting to settle down a little bit. So this is the same type of thing I was talking about with like ABB, where I think it's a good chart, it's a good company. It just needs a little bit more time to consolidate this move. So if you could get this towards the bottom of this range, like $60, or even underneath it a little bit, like 55, that's going to give you a real low risk place to buy this. As far as where it could go, I don't know a ton about the company. Same standard issue that I would do on anything else, right? I'd look at the float, I'd look at the short interest, I'd look at the average volume. I'd probably look at their debt, their cash. What is their debt to equity ratio? Where is that? Here we go. 0.00. That can't be right. Finance.yahoo.com. Huh. They really have no debt? I mean, if they have no debt and they've got $1 billion in cash, then that's even better. Financials, balance sheet, quarterly. No long-term debt. They've got $241 million in accounts payable, $105 million in other current liabilities, whatever those are. But you could dig into the the quarterly report and find out exactly what those other current liabilities are, as well as these other liabilities. But yeah, this company has no long-term debt according to their most recent earnings report. So, that's definitely nice. What do these guys do? Design, develop, manufacture, and market proprietary semiconductor products. Oh, so they're LED drivers, low noise amplifiers, mixers, modulators, DC to DC converters. Okay. So yeah, I mean, this type of stuff is always hot. Right? These types of things are always hot because we're in a technological age where everything requires transistors and diodes and resistors and converters and all kinds of stuff. So, I think this is it's definitely a hot industry to be in. So the other thing you can do is compare their kind of financial statistics to their competition. So debt to equity, what is their? There's a lot of companies that have no debt in this industry. What about margins, like profit margins? Where's Skyworks? Number 2. Right behind Taiwan Semiconductor Manufacturing Company. So strong profit margins. Xilinx here, this is another one, similar market cap, 25% profit margin versus 29%. These are good numbers, right? Company's got 30% margins with no debt. And it's, kind of number 2 in its industry, just at a high level, kind of looking at this in 5 minutes. Looks great. The chart looks nice. I'd say it's a good investment for sure. So that's it. Those are my thoughts on these 10 stocks. We'll do this again. I'll try to do it maybe once a week or so. I just want to remind everyone, if you're posting responses on the Reddit thread, make sure you specify both whether you're interested in the stock long or short, and also whether you're interested in the stock long term or short term, right? Because it's difficult for me to really analyze when somebody just gives me a ticker and says, I'm interested in Walmart. Well, do you think it's going to go up? Do you think it's going to go down? What's your time frame? Are you a day trader, swing trader, long-term trader, right? I need to know more information. So the standard thing would be to just say, kind of like these guys did, Nvidia long for the long term. And that way I can get, more accuracy in terms of which ones are upvoted the most and stuff like that. Cause I know I passed on some that were upvoted a lot, but it was because I didn't know whether the people were interested in buying them long or shorting them, or how long they're planning on holding or any of that stuff. So hopefully that'll be better for next time. But in the meantime, thanks for listening, and let me know if you have any questions. Thanks. Bye.